few options for your YouTube intro. Choose the one that best fits your style. Option 1, direct and enthusiastic. Hey traders, and welcome back to Forex Scope. I'm excited to dive deep into the AUDJPY today on the 15-minute and 1-minute charts. If you're looking for your edge in the Forex market, make sure you hit that subscribe button and the notification bell so you don't miss out on our actionable insights and future predictions. Let's get started. Option 2, friendly and informative. What's up, Forex Scope family? Ready to unlock the secrets of the AUDJPY? Today, we're breaking down its movements on the 15-minute and 1-minute timeframes to give you a clear picture of what's ahead. For more of this kind of analysis and trading signals, be sure to subscribe to Forex Scope. Your journey to smarter trading starts here. Option 3, concise and professional. Welcome to Forex Scope, your go-to for Forex analysis and trading signals. In today's video, we're focusing on the AUDJPY, examining both the 15-minute and 1-minute perspectives for future price trends. If you find value in our content, please consider subscribing to Forex Scope for regular updates. Let's analyze the AUDJPY. Option 4, slightly more casual and engaging. What's happening, everyone? It's your host from Forex Scope, and today we've got a hot one, AUDJPY. We'll be dissecting this pair on the 15-minute and 1-minute charts to bring you those crucial buy-sell signals and a glimpse into where the price might be heading. If you haven't already, smash that subscribe button and join our growing community. Let's get into it. The support zone is identified between 100.451 and 100.492, spanning from the timestamp 176-283-7200 to 176-284-3500. This area exhibits clear price action characteristics, particularly a period of consolidation and multiple retests of the lower boundary. The price reached a low of 100.449 during this period, showing strong buying interest around this level. The upper boundary of the support is at 100.492, with the price repeatedly finding a floor in this vicinity before attempting to move higher. The presence of several candles with significant lower wicks within this zone, coupled with the general sideways movement observed between 100.451 and 100.492, indicates accumulation and a strong reluctance for the price to fall further. This suggests that this price range has historically acted as a floor, where buyers have stepped in to defend the level, creating a zone of demand. The extended period of testing and the absence of a decisive break below this level point to its significance as a robust support. The resistance zone is established between 100.721 and 100.815, encompassing the timestamps from 176-282-1900 to 176-282-4600. This price action area is characterized by a series of rejections and an inability for the price to sustain levels above 100.815. During this period, the high price reached was 100.864, but the candles consistently retreated from these higher levels, indicating strong selling pressure. The lower boundary of this resistance is at 100.721, which has served as a ceiling where sellers have actively entered the market, pushing the price back down. The presence of several candles with significant upper wicks, particularly the sharp declines from the highs within this range, clearly demonstrates a zone of supply. This area has repeatedly proven to be a hurdle for the upward movement of AUDJPY, as sellers outweigh buyers at these elevated prices. The consistent inability to break through and hold above this zone highlights its role as a significant resistance level, where a substantial amount of selling activity has historically occurred, preventing further price appreciation. The support zone is identified between the price levels of 100.579 and 100.603, specifically between the timestamps 176-289-0240 and 176-289-0300. This area shows a clear reaction from the market, with prices finding a floor and bouncing back upwards. Looking at the data, the low price within this timeframe was 100.597 and the high was 100.615. This zone exhibits characteristics of a potential accumulation area where buyers stepped in to prevent further price decline, indicated by the multiple touches and subsequent rebounds. The significance of this support is reinforced by the fact that it formed after a downward price movement, suggesting a potential turning point. The price dipped below 100.603 multiple times but was met with buying pressure, creating a consolidation before the next move. This level acted as a significant barrier, demonstrating a clear price action reaction. The resistance zone is identified between the price levels of 100.636 and 100.647, specifically between the timestamps 176-289-1260 and 176-289-1440. This region clearly indicates a ceiling for the price, where selling pressure is dominant, leading to price reversals. The highest price observed in this period was 100.669, and the lowest was 100.611. We observed that prices struggled to break above this upper boundary, forming several bearish candles or wicks rejecting higher prices. This area suggests a cluster of selling orders that prevent the price from moving higher, characteristic of a strong resistance level where previous attempts to push higher were met with significant selling. The repeated testing of this price range without a sustained breakout points to its importance as a resistance. The visible price action, including the formation of upper wicks on several candles within this zone, underscores its role as a supply area. The market is currently hovering around the 100.583 mark, which is quite close to the lower bound of the identified 1-minute support zone, 100.579 to 100.603. Considering the recent price action in the 1-minute timeframe shows a slight upward movement after touching the lower end of the support, we can anticipate a potential bounce. However, the overall trend on the 15-minute chart, indicated by the narrowing Bollinger Bands and the price oscillating around the middle band, suggests a period of consolidation or a potential shift. The Fibonacci levels, with the lower price, 100.611, being less than the higher price, 100.635, suggest a potential upward bias, but we need to be cautious. The recent price action from 176-289-7500, 21 hours and 45 minutes, to 176-289-8340, 21 hours and 59 minutes, shows a lot of sideways movement within the 100.600 to 100.630 range, with a brief dip to 100.579. This indicates a tug-of-war between buyers and sellers. We will project a short-term upward movement towards the upper end of the 1-minute resistance zone, 100.636 to 100.647, with a potential retest of the 15-minute resistance at 100.721 if momentum builds. However, given the tight Bollinger Bands on the 15-minute chart and the lack of strong bullish signals, expect pullbacks and consolidation. The prediction models a move up to 100.600, followed by a slight pullback to 100.590 as traders take some profits or sellers re-enter, then a renewed attempt to push higher towards 100.615 and potentially 100.635, before a final push towards 100.625, reflecting the underlying consolidation and the test of resistance levels. This zigzag pattern signifies the current indecision in the market, with a slight upward bias due to the Fibonacci positioning, but capped by immediate resistance and consolidation patterns observed in the recent data.